welcome back to another week of market updates. Today is April 14th, 2023, Friday here, and this is coming to you from Kelly. So let's get right into our updates of the week. Alrighty, going into a quick market update here. It was a week full of inflation data with the CPI print as well as the PPI print for the month of March. We had earnings season kick off here and retail sales also for the month of March. So as of Thursday, April 13th, we saw the Dow Jones gain about 1.3%, the S&P gain about 0.9%, the NASDAQ gained 0.7%, and we also saw yields rise as the 10-year U.S. Treasury yield moved up about 1.2% this week. Heading right into that CPI report for the month of March, we saw headline inflation slow to a cool 5%. Definitely not where the Fed wants it to be, but it's moving in the right direction. And then we had core CPI come in at 5.6% on an annualized basis as well. On a month-over-month basis, we saw CPI rise just 0.1% as this was about half of what was expected. And then core CPI rose a hotter 0.4% month over month, which was about what was expected. So you can see that core CPI, was really stickier this month as it increased past the regular headline CPI. So definitely an interesting data point there. It'll be interesting to see how both of these continue to move in the next few months. Wanted to dig into what was driving this inflation report in March here. So I wanted to point out that transportation services here was the highest inflationary pressure at 13.9% year over year. And we also saw shelter go up 8.2% year over year. And the electricity also go up quite a bit at 10.2% year over year. So those were kind of the upward pressures, and then driving inflation lower was actually energy. So you can see that -14%, -17%, depending on what measure you're using there in terms of energy from a year ago, as kind of we move past the 1-year mark of the Ukraine-Russia crisis over there. Then we also saw food at home prices drop about 0.3%, still an 8% annualized gain, but on a month-over-month basis, it actually dropped about 0.3% there. Really interesting as we hope to see lower prices in the grocery stores, or at least, stickier prices in the grocery stores. So definitely an interesting CPI report, definitely interesting things moving in the right direction, some in the wrong direction as we look at inflation from this perspective. The other really key inflationary report was the PPI report of this week, which is often thought of as a leading indicator, the producer price index or the wholesale prices index, as it is often a predecessor for how inflation is moving. So you can see how it peaked up towards that 12% towards the middle of the year, just a few months prior to when CPI peaked, which was really interesting. And then in March, we saw PPI actually cool to about 2.7%, really low there, the lowest it's been in over a year for sure, definitely closer to 2 years. Then we also saw core PPI come in at about 3.6% on an annualized basis. And then on a month-over-month basis, we saw PPI actually fall a pretty rapid 0.5% from February compared to the neutral inflation expected. On the other hand, core PPI rose about 0.3% month over month as expected. Then digging into some of the drivers of the PPI report here, just wanted to point out a few things. We saw foods actually increase for producers. Food costs increased month over month about 0.6%, while on the other hand, energy prices fell about 6.4% just from the month over month basis. And then we also saw transportation and warehousing fall a good bit and trade costs fall a good bit. So most of it's moving in the right direction, at least for producers. And we definitely saw that add up in the 2.7% annualized PPI inflation report. Either way, though, both CPI and PPI are still above that 2% inflation goal. So, we look forward to getting more of these data points, as well as the PCE inflation, which is what the Fed really likes, as we look forward to anticipating what the Fed might be doing in their May meeting, whether they're going to go with a 25 basis point hike or a neutral pause, or maybe wait another month, another meeting. But we'll continue to keep monitoring these and seeing where the trends are. Another update in terms of the employment situation, we got the initial claims for the week ending April 8th. Came in a bit higher than expected at 239,000, pulling the 4-week moving average up to 240,000. Also up a bit from last week's 228,000 claims, and is definitely not indicative of a recession or a period of high unemployment yet, but we are seeing an overall upward trend in initial claims really since this January low here. So you can see ever since then, and really ever since the September low of initial claims, we've been seeing an upward movement of claims, despite the fact that the unemployment rate is still at 3.5%. We also got the March retail sales numbers this week, as they slipped about twice as much as they were supposed to, down a whole percent from February following a negative month. Also in February, you can see that general merchandise was really the largest category driving this data point down. And on a year-over-year basis, though, retail sales remained positive. So they were up about 1.5% since March of 2022. But again, still, we're not seeing that economic growth like we were last year. So we'll continue to see how consumers are spending, how consumers are saving as these really important economic data points roll out. For our final economic update of the week, we had Q1 and the bank earnings season kick off this morning. We got JP Morgan, Citigroup, Wells Fargo, as well as the regional bank PNC all report their earnings. So interestingly enough, all four beat their analyst EPS estimates, with JP Morgan and Citi coming out on top. So you can see in the stock prices, both of them had pretty big jumps in the last day or so here. Both of them beat their EPS estimates by over 20%, so a great win for them. And, unsurprisingly, with the uncertainty in the regional banking sphere, we had earnings reveal that deposits were in fact moving upstream to those larger banks like JP Morgan. So, PNC not doing so hot, not doing great in the regional banking space. They're doing okay compared to the other ones, especially compared to SVB and Signature, definitely in a better spot than them. But we're really going to see the JP Morgans, the Citigroup, the Wells Fargo benefiting the most in this environment. So regardless, we are constantly watching the news on inflation, the Fed, interest rates as the yields moved up this week, corporate earnings as we start this Q1 earnings season, as well as geopolitical events as always. We really appreciate you tuning in to these updates, and we look forward to providing another update very soon.